Welcome back to Halftime Report on CNBC-TV18. Now let's talk about ABB India. They posted their numbers for Q4 calendar year 25. Good numbers that came in terms of order booking. Revenue saw a growth of around 5%. Labor code impact at 65 crores. The stock is buzzing away in the trading session today. Now I managed to speak to the management of the company, and I started by asking them about the order book, the data center opportunity as well. Listening to that conversation.
For quarter four, I think the signals are quite robust for us in terms of how order pipeline is showing up, in terms of what we captured in quarter four, and how the the business pipeline is picking up in the following quarter. So yes, that's the highlight of quarter four, and also what we see forward. If you recall, and if you have been following ABB, we had tremendous growth in last 5 years, but especially in 2025, few quarters have been timid. The growth was not foreseen, and one can attribute to a number of factors, but definitely quarter four was standing out for us. And the growth comes from multiple market segments, be it automotive, renewables, data centers, and also certain core sectors which placed some good orders on us.
Okay, and just a follow-up, do you think this good order book or the order inflow that one has seen, that is going to continue in 2026 as well for you all?
So as we see the customer inquiry and the project pipeline build up, it is quite strong. So we will wait and watch for next few quarters to give you an absolute confirmation, but we do see there is a strength in the market going forward.
Okay, you do see strength in the market. Sridhar, coming on that, right, your order backlog also is very strong. More than 10,000 crores is what we're seeing. What would be a typical conversion in terms from backlog, order backlog to your revenue side? Because you all do have those fast-moving orders as well. So how much of that order backlog actually is fast-moving? And what does it entail in terms of revenues that we could see in maybe the next Q1 or even in 2026?
Thank you. This is a good question. I think it, of course, gives a bit of a future direction as well. So what I see, 10,000 crores of order backlog, first of all, is a very strong order backlog as what we have seen, which is growing up and which is going to help us to plan our revenues for the future. That's very clear. Out of this order backlog of 10,000 crore, almost 30% is around the large orders, which got the execution cycle, which exceeds beyond 1 year. So that means, technically speaking, you have 70% of that is what could get a conversion possibility for 2026. And therefore, naturally, you need to have a book-to-bill orders in 2027, 2026, and 2027 as well. So that's how we see.
Sridhar, numbers that we could see for data centers, given that, the opportunity for India, they say overall from data centers would be by 2030 around 30 billion revenue in terms of that. For ABB, what are the numbers right now? Maybe in terms of order book, how much is data center and the growth that you're seeing here?
So as you know, ABB has 18 business divisions. So that means 18 distinct business models. Out of 18, 2 business divisions are distinctly exposed to the data center segment. And if you recall some of the interviews we had with your channel a few years ago, that time the size of the data center market was $1 billion. And that looked like a big number. Today, as we speak, it's already expanded to $10 billion. And I believe in you that when you say it will be $30 billion soon. So I think there is a strong trajectory and a strong CAGR growth in this particular market segment. As far as our books are concerned, we capture for all the market segments, we capture about 15% of our books, order books into data center.
Okay, 15% of your data books, order book is into data centers. And the growth that you've seen maybe in the last 1 year, so that we could understand how is the growth going for data centers as an industry opportunity as well?
As an industry spend, I think the data center industry is growing at a CAGR of 14%.
Okay, and that's what you all are also growing at?
Well, these are the projects, so they come in, in different cycles. But yes, I think there have been years which have been very strong, and then you get a bit of a build period, and then you get the next scale and next expansion that comes along.
Okay. Sridhar, could you help us with the margin side as well? Obviously, the QCO impact, is that starting to ease out? I believe last time also you had said it'll take maybe a couple of quarters to ease out. So maybe by Q2 of the next year, will we be able to see it completely eased out? Also, is there any sort of commodity pressure you all are seeing, any increase in terms of prices that could be maybe a concern? Because EBITDA margins, if you adjust of labor code this time, has done well. Is that sustainable is my main point.
I think it's a good question, and of course, it's naturally flows from orders to revenues to the margins, right? So that's how it is. So I think the material cost, as what we see, is very important ingredient of the total cost structure of the organization. We are today at 61% as what we see, and that's basically, we were at 58 and we have moved out to 65, and that's basically more cost because of three reasons. A, I think definitely commodities and metal prices are definitely going to has an impact. And of course, the next one is the forex volatility, which is also another impact what we have. And the next one is around the mix of orders and revenues we have executed in this current year, right? And so I think these two factors, which is the forex volatility and the commodity prices, is something which is not in our control. And we're a short cycle business, because 76% of our businesses comes from short cycle orders. That being the case, so our ability to adjust the prices in the market going forward is definitely an action which the company will take at appropriate point in time.
Mm-hmm. So can we all expect good margins? Because I know the focus is not on margins, focus is on growth as well. But all investors always want to know is whether good margins in Q4, would that continue in the next calendar year?
Yeah, I think today we are at a PAT of 12%, right? So we were earlier but higher percentages because we enjoyed the benefits of the pent-up demand of COVID in the earlier years. But I think all our actions are to maintain this particular margin as what we are today and definitely improve on it. So it's basically a play of margins, margins on the orders what we secured, the volumes which we have, which will drive the efficiencies in the business, and of course the external factors which will of course have to be managed as risk in any business organization. So long story short, I think our efforts is all about to be sustainable on the margins, and that's how we will try to work.
Okay, and just the last quick update, the robotics division, obviously we have the parent company which has made announcements coming in here. What is the update on the India front here, and what is the strategy for India now?
I think robotics, it's a business which is identified for divestment. So we have gone to the shareholders to seek their approval as per the process what is mandated by the law in the country. So I think we wait for their decision to come on this, which should be available in the next 2 to 3 weeks. That's how we see.
Okay, all right. So that's management of ABB India. That stock up around 8.5% at this point in time, doing well in what is also a lively market today. We'll take a short break. But up next, Manisha Gupta will join us with her segment, Commodity Corner. Stay tuned.